The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. We got the S&P's up 4 points there. The Nasdaq up about 5 right now. We got the Russell down 6, and the Dow is currently up a mere 3 points on the day. Don't want that for you. Plenty of volatility going on intraday. Here we got the gold right now. It is down 26 points on the day. Massive movement in gold. We got silver is down over 3%. Copper down about 0.75% right now. We have oil is up 1%, up 94 cents on the day. Natural gas and corn looking pretty flat at the moment. And soybeans down about 12 points. We got euro dollar currently down 42 pips from the previous close. There we got pound dollar down 15. Aussie dollar down a mere 4. Euro yen up 40. Dollar yen up 68. Pound yen up 1.02, so 102 pips right there. We got a dollar CAD up 15, and we have the dollar franc up 19 pips on the day. So we did have some news trading opportunities this week that you may have taken advantage of. So let's pull them up and see what we got. And I got traders that send me different trades. I got traders that send me live trades, demo trades, just as they're learning, as they're doing, a variety of trades like this. And one of them is pretty cool. I always love it whenever traders, take it, they learn from it, and they take it to another level. And, one of my traders, he sent over an email saying, hey, I was checking this news trade out this morning on the ISM. And usually, we focus on, euro dollar, pound dollar. But he decided to take a focus a little bit different this morning and went on the U.S. yen, as he just, saw a good, potential for a lot of implied volatility there. So he hopped in on that one. And I did a binary strangle. So he went in, and right about 9 minutes before, so pretty short trade here, 9 minutes before. Let's go. Let's zoom in on this one. And I'm going to break it down onto, let's see here. We'll break it down to 5 minutes. And the report came out right over here. So he got in about at this point. He was able to get the 103.03. He bought it for $8. So what he did is he's trading Nadex here and bought this strike, and then he went in and he sold the 102.60. So right down here. And the market was currently trading again right when he got in the trade. It's about right there, almost right there in the middle, 102.83. And so if he bought for $8, that means he had a maximum $92 prop potential on the buy side. Now, if he sold for $91.50, that means he had a maximum profit of $91.50. A little simple trick on binaries when you're trading on the Nadex exchange is the price you buy for when you're a buyer, that is your risk. $100 minus that is your reward. So if I buy for $8, okay, then my risk is $8, and my prop potential is 92, because my prop potential when I buy is between $100 and where I buy. When you sell, you just flip it around. So instead of what you enter the trade for, like I enter it at 8 to buy for $8 risk, well, if I sell for $91.50, the price I enter for is my prop potential. So my risk is $9.50, $100 minus $91.50. So, he had a combined, what is that, about $17.50 risk on the trade right there. Maybe not even that much. $16.50. Yeah, $16.50. So he actually had $8.50 risk. Anyway, so $16.50 risk on the trade. Anyways, he went in on the trade, and he risked $80 on the ones he bought. He risked $85 on the ones he sold. And then he went in and he got out when it hit the strike. And I call this the 43-57 rule. So if I buy for 8, I have a take profit set at 43. If I sell for, whatever price, like say $91.50, I have a take profit set at 57. Why do I have that rule? What that rule is when a underlying market, such as the U.S. yen, hits the strike, which the strike up here being 103.03 at 11 a.m., when it hits the strike, then it will be worth $50. Why? Because the binary's price is reflective of the probability of that binary expiring in the money. Thing is, I don't have to wait until expiration on the trade. And, well, so why do I use 43.57 instead of just 50 if it's 50? Well, you have to have bid-ask spread. Okay, so let's say that makes you, 47.53. But then also, what if it gets within like a couple ticks of what I'm going for and then falls back down? And I'm in a nice profit, but I give it all back simply because I was trying to wait exactly to get to that perfect, 47 or $50 mark. So I'll go for the 53, or I'm sorry, the 43 or the 57. And so Esteban, when he did this, did a great job on it, and he went in, and he's demo trading right now. Can't wait to get access to live. And he would have bought at 8, sold at 91.50. When it went up and hit 103.03, he sold out of the trade. Literally, 10 minutes later, a 10-minute trade, and got a payout right there of $430. So what was his profit? Because this can be confusing, okay, if you don't understand how this works. Well, let's look at how much money was put into the trade, or actually, let's look how much we made. So 430 was the payout, but minus 80 and minus 85, so at a profit of 265 on a risk of 165, being 80 plus 85. Of course, you account for exchange fees, but they go basically the exchange fees. I don't worry about them too much. One, the profit's so high, I'm not worried about a couple dollars. Two is the larger your trade size gets, the less they matter because they cap at $10. So if I do every contract 90 cents, okay, for an exchange fee. But if I do 10 contracts, it's $9. If I do 100 contracts in one order, it's $9. So I focus on, I don't worry about the fees. I mean, I don't know about you, but I've had times in the past where I've lost on a trade because I was trying to recover my fee. I was all worried about my fee. And yes, fees are important, and fees can eat you alive and everything else. But again, you look at your total risk reward, your total probabilities, but don't lose on the trade because you're trying to get that extra 90 cents. It's just not worth it, okay? But anyway, so yeah, he netted a 265 on a 180, or 165 there, so 160% return in 10 minutes. Not too shabby. And that was doing a binary strangle. So there were multiple ways to do it. He decided to do it on US yen using binaries. Also, you can do straddles. Those are other possibilities as well. Let's check those out. We had some pretty big moves on some of the currency pairs here. Overnight, you can see this massive drop right here in the euro dollar. So it sort of popped up and then just really, really flew down. And right here, we got to move. Let's see. We'll use the ruler to make it easy. Okay. So low right there to when it came out. Only got about 21 pips on the euro dollar. And low to high, got about 34. So worked out really well by doing the straddle or strangle there that he did. And let's go ahead and let's check out the pound. And again, these were very, very active previous. So a lot of the juice had been sucked out of the market already whenever they came out. But let's see here. We'll go down on the pound dollar. A little more volatility, a little more than 27. There we go. About 30 pips. And really just not a big move. This is a lower percentage trade where usually it moves a lot further than this. So whenever you're looking at these reports, you always want to look at the expectation versus the outcome and how they work. So, we had a 56.5 on a 58.4. And so, whenever you're looking at the numbers, always go, okay, what are my expectations? What do I think is going to happen on the trade? What actually did happen on the trade, and then you can use that to help you know when to enter a trade, exit a trade, etc. For any of the trades that you're trying to do. So again, on the ISM today, let's see here. Let me pull up the details on it. The US ISM, we had an expectation of 55.2. Okay, was the expectation, and let's see here. And those numbers, by the way, will change. If you look at them one day and you look at them the next day, they may update a little bit. And I was looking for either a 57.2 or 53.2 to get a big move. And usually, if we get that kind of offset, okay, if it comes in and we break that number that we're looking for, we'll get a very large move. We didn't get it today. And so what could you do? What could you have known in advance to help you understand that that may not happen? Well, the biggest thing I can tell you is just to simply look at the massive, unusually large moves happening in the evening already. So the market had already flown up. So a lot of that juice that we usually see coming off the ISM just really didn't happen because it was already used up. All the orders had already been taken out. And so when we finally got this little pop over here, there wasn't a whole lot to do, and it really just came right up to settlement. Look at that. Stalled out and fell back down. And if we go from a high to low on this thing, right here, you look at that, and I mean, it went right back up there, but really wasn't able to break much past settlement, came back to settlement, bounced off of it. At best, you're looking for a break even on the straddles. So just be aware, when you see a massive move happening the night before, I mean, we're talking like 90 pips already, and then it gives all that back, there may not be just a whole lot of oomph left for a big news trade, okay? And I was watching this thing as it just kept going, and then I was like, all right, this thing's going to retrace. And yeah, it did. It pulled on back, just noticing how it was felling over and over again up here. So it's a few ticks off the high. And, but I mean, that was last night. Going to this morning, you don't have the same thing going on. Now, we did have another report that also came out yesterday evening. And let's see, we had the UK PMI report. And let's see if we can get some information on that while we have the pound up. Right over here, you can see where it's coming out. And I want to do one more thing on this. Okay. So on the UK PMI, when it was released here, always double check your calendars and everything else. But when it was released, we got a nice pop on the 5:20, I guess 4:28 Eastern time release. Right there, comes on up. Got about 36 pips off of it. Again, not as big of a move as we usually expect off that, but what had already happened. Even before this, what had already happened. Remember, we had that big move already taken place. So, again, if you go back and you look at the chart, and this wasn't like a slow big move. This was a very fast move. A lot of the order flow had already been taken out. So how far do you really expect it to go? So, maybe 40 pips, maybe back up to the high, or, maybe to go on back down here at best to the low, like right back here at settlement. It's probably about the biggest move I expect on this trade. So just keep those things in mind, and that might be a time when you go, you know what, the straddles may not work for me. They still could have worked for you. You could have got in, and you may have been able to pull that off. But when you're looking at them, go, sometimes the binaries are better. Usually the spreads are better. But here's the one big advantage. You got a couple big advantages with binaries. The one disadvantage I want to tell you first is if you don't hit your profit target, a lot of times you're looking at a total loss. Whereas on a spread, often you're not going to take the max loss, okay? Binaries will take the max loss when you lose. So if you're risking, $30, then you're probably going to lose all 30 if it loses. But here's the advantage on binaries is they don't have to move as far, and that one-to-one's a lot easier as well. So you can actually put up less risk and have a higher probability of profit because it doesn't have to move as far. You just have that risk of losing everything if it doesn't move at all. All right, stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. So now we're just checking out some of the different markets here, but also I wanted to get you prepped and ready for the news coming up this week, because it is a pretty loaded news week, all in all. So let's go ahead and do a review for you, and also a reminder for you, if you don't have a Nadex account, just hop on over to TFNN.com. Click on the Nadex banner on the right side of your page, then go to Trading and click Demo Trading Account. And then fill in the form, and it takes about 15 seconds, and they'll send you an email with the password, and you can log in right away. To get started with a live account, just click on Create Account, and you can go from start to funded in about 5 minutes. It's a $100 minimum funding requirement, and that's just a deposit, and that'll get you going. Of course, as you get going, you're going to want to do more, but also funding that live account is a way to get that demo extended for you for an indefinite period of time there, for at least a year. And they'll just keep re-extending it once you got that thing funded live. All right. So let's look at what we have coming up. We got the Aussie retail sales number is coming out at 7:30 tonight. It's a pretty low volatility report. Again, it comes out at 7:30. We usually don't get a whole lot of movement out of it. On the Aussie dollar, we're looking at about a 20% of the time it hits 50 pips. 16% of the time on the Aussie yen does it hit 50 pips. The average range is 41 on Aussie yen and 36 on Aussie dollar. So not really your greatest straddle or strangle. And but anyways, those numbers can help you out a little bit as you're just watching the market. Anyways, be aware of it regardless of whether or not you're a news trader. Now, if we hop on over to the interest rate decision, the average move is 45 pips, but check this out. 67% of the time, it breaks 50. So knowing that it's breaking 50 more often than not, but the average range is low, that means when when it doesn't move like at all. So, I mean, you're talking like a 35, 55, like it'll move 30 pips or 20 pips, and then like 55, 60, 70, 80 pips when it does move. So, again, not usually the biggest mover, and that one's going to come out at 10:30 this evening. And that's your cash rate and RBA rate statement, so the Fed funds rate for the Aussie. Right now, we don't have an expectation that anything's going to happen on the interest rate, but you never know. Australia has thrown in some surprises. If it does move, it'll move big. But, we just don't expect it to move that much. Okay, there's really no expectation that there will be any rate cuts in the Aussie until 2014. All right, so let's move on over. Let's see what else we got coming up. I'm trying to see if there's anything else you need to be aware of, but that really is the main stuff right there. If we hop on into Tuesday. On Tuesday, just be aware you're going to have a construction PMI coming out of Britain at 4:30. Not really one of the most tradable events, but nevertheless, be aware that it is there. So that way you don't get blindsided by it. Again, that comes out at 4:30 a.m. on Tuesday morning. If you are a pound dollar trader, be aware that event's going to be released. But it's usually not statistically a real good trade. Straddle, strangle, butterfly, etc. It's completely sporadic. On the Aussie pound, was sort of the Aussie GDP. Think of GBP, but the Aussie GDP coming out on December 3rd. That's going to be released at 7:30. And again, that one is not a big mover. About 54% of the time, it breaks 50 pips, and average range, somewhere between 40 and 50 pips. So, if you can find a really cheap one, but again, only 50% of the time does it get that far. So, I would want to be able to make a 1-to-1 within 44 pips or less if I was going to do this trade. Okay? So, again, not the highest on my list for the week. Now, let's start getting into a little bit more of the fun stuff, okay? Let's see here. I've got one more. Let's dive in. We got one more that we want to look at. Let's see here. On December 4th, I'm just trying to see. Yep, that's December 3rd, all wrapped up. December 4th. Okay, we're going to have the pound services PMI, the British services PMI. That's coming out at 4:30 a.m. And the expectation there is it comes out at 62.1. We're looking for it to be about 2.5 off of that. But look on over at a few of the potentials. And again, that's a 4:30 release. We got pound yen, pound dollar, euro pound, all potentials. Euro pound has the smallest move. We're talking 2 hours after, like 29 pips, 12% of the time breaking 50. That could be a great butterfly for the 11 o'clock expiration. Not the 11 o'clock, the 7 o'clock expiration on that report. Stay right there. We'll be right back. We'll go over this a little bit more in detail right after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour. And so check it out right over here. We got several things going on. But we were talking about the pound PMI report, talking about how the euro pound, which is now available on Nadex, has the lowest average move, only 12% of the time breaking 50 pips with an average move of 29 pips. So that could be a very good potential trade. That should be for the 7 a.m. for the 7 a.m. Potential binary butterfly right there. Pound dollar and pound yen, out of the two, I'd be looking at pound yen on this report. About 60% of the time, it breaks 50 with an average move of around 75 pips. So pound yen would definitely be the trade. Just be aware of the averages. If that number comes in, like at expectations, just a little above, a little below, if you don't get a decent deviation, at least a couple points off of the forecast, then be looking to exit the trade at break even after about 5 minutes if you're not getting your move. Now, we also got the ADP, NFP, and the NFP coming out this week. So let's take a look at those and see what we can do there. That might be able to, again, set up some trading opportunities. So let's see. We just covered the services PMI there on the pound. We got the ADP non-farm employment change being released at 8:15 here for the U.S. And we got a whole variety of trades. It's actually not the biggest mover, as much as you'd think. Now, the NFP, totally different story. But the ADP, NFP, not the biggest mover of them all. US yen actually one of the smallest moving pairs, could potentially be butterflied. Less than 20% of the time does it break 50 pips with an average move of 45 pips. So if you could go in around 8 o'clock and maybe pull off at 10 o'clock, 40 pip wide butterfly, that might be a potential trade there on the US yen. As far as breakouts, the only one that's even halfway decent really is euro dollar, 54 pips with an average move of 60 from high to low. So anyways, that gives you the basic stats there on the euro dollar, on the ADP NFP. I'm just trying to go in. We want to get the best trades of the week set up. Now, one that does usually have a pretty good movement that'll be coming out is also on Wednesday, and that's going to be the Bank of Canada's interest rate statement. Their overnight rate comes out at the same time. Also, we have the added help of the U.S. ISM non-manufacturing PMI and new home sales coming out of the U.S. All this happening at 10 o'clock. And about an hour and a half before that, trade balance gets released at 8:30. So, what is the play? Well, the USD CAD over 70% of the time breaks 50 pips with an average range of 85 pips high to low. So putting those pieces together, you're actually able to pull off a high probability trade with a great movement range right there. And again, that's the 10 o'clock, so within 2 hours, we're looking for about an 80 pip plus move right there. So you'd be looking at around either the 11 o'clock or the 3 o'clock expiration on either the spreads or the binaries, whichever one you prefer, or both. You know, I've seen some people literally put half risk on each. And if they both hit, awesome. If only one of them hits, it can often cover the loss, if not more than cover the loss of the other side. But looks like, again, that's the first best play we've seen all week with high stats, high move, and the ISM ought to be helping us out. Now, what else could be played on the ISM? And really, let's see here. No major things. I'm going to go back again to binary butterflies on the U.S. yen. So we may be looking to hop in at the 11 o'clock or something like that and go for, 11 or 3 and go for a straddle on the dollar CAD, and then look at the dollar yen and go for a butterfly. This is one of the lowest probabilities I've seen in a long time. The U.S. yen on the ISM report usually only 4% of the time moves 50 pips with an average move of 37. So making it my definite favorite pick for a butterfly for the week with such a low probability of breaking 50. So if you're able to pull that off, like I said, you could go in and with the timing of that report, you could probably get in, 9 or so and potentially pull that trade out right there. It's like if you got in at 9, there's a 25 pip average range before the report, and on the USD yen, 70 pips 30 minutes before. So that if you're focused on, say, the 11 o'clock, you could do basically a strangled butterfly or a strangled or a strangled straddle. Yeah, there you go. You go do basically a strangled butterfly, and that's where you're going in and you're doing a binary strangle and you're doing a butterfly, or you could do a straddled butterfly, and that's where you're going in and doing a straddle with spreads and doing a butterfly on the U.S. yen. And the straddle, of course, to be on the dollar CAD with the Bank of Canada rate statement coming out. So, anyways, just a couple ideas, couple ways for you to trade. Of course, oil inventories also coming out. Let's see, 10:30 a.m. That'll be released, and then the Aussie dollar will have the trade balance coming out at 7:30. Basically, what money's coming in, going out, all that. And let's see here, U.S. new home sales, and that's interesting. Okay, so the U.S. new home sales is actually going to be delayed data. It's 41 days late. It's a minor impact report, but it is extremely late. It's actually late still due to the government shutdown. Not all things are yet fixed on those sites. But anyway, so that report is going to come out. The expectation is 427,000. Would not expect any major move off the report. Okay? It is late. It's a minor impact anyway, and especially being this late. A lot of other reports have helped basically people gather that data anyway. So there shouldn't be any big surprise on that announcement. Now, let's see. What about a little bit later in the evening? That's pretty much it. Okay, let's go over to Thursday, December 5th. And we're going to have a slew of pound announcements coming out. We got the autumn forecast statement, followed by the two big ones, the asset purchase facility and the official bank rate. And then the MPC rate statement will be coming out. It says, tentative, unknown, if you look at most calendars. Again, just go back and look at when it's been released historically. And it's been released at basically the exact same time as the asset purchase facility. Okay? So, if we're looking at that report, when is the statement going to come out? Probably come out at 7 a.m. All right? So, 7 a.m. Is when that's coming out. Let's see here. And we're not expecting any kind of interest rate change overall. Let's see here. But we still do expect big moves. So we're looking at 80% of the time on pound dollar and pound yen. I'm getting a nice big move of 85 to 95 pips on both of those. So pound dollar, pound yen, 7 a.m. So it's a nice, not too early news release. You can get up and trade there on Thursday morning. Again, that's the Bank of England's rate statement, the official bank rate coming on out. And since it comes out at 7, then you could look at the 8 a.m. Spreads. You could look at you wouldn't be able to look at 3 p.m. It wouldn't be open yet. But you could look at the 8 a.m. spreads, and then you could also look at the, what have you got? You'd have 8, 11, and 3 p.m. binaries. So you have a good variety of potential contracts you can look at for strangling or straddling that news report on both the pound dollar and the pound yen. And some people go, which one should I do? I'm like, you can do both. You can do one, you can do the other. If you do both, then cut your risk in half. So if you're normally going to risk, say, 5%, then do 2.5% on each. Okay? So don't go in and do 5% on both. Don't double your risk. Just, hedge it out, spread it out a little bit. Okay? Diversify your portfolio. Let's go ahead, and what else do we have? Let's see. Now, Europe is going to have the ECB is going to have a big press conference coming out as well. And this is where Draghi comes out. He makes a big speech. And let's see here. The minimum bid rate, that comes out so we just had the pound bid rate. Oh, here's a big key, too, is often this, when the pound bid rate comes out, like it comes out, it moves really fast, and then everything just chills pretty quick. So you got about 30 minutes for that move to happen. After that, everything's going to go quiet, waiting on the minimum bid rate, which is 7.45 for the euro, and then the big mover, unless they surprise the market with an interest rate change, is the ECB press conference. Okay? It's an hour long. It has a couple different parts. The first part is a prepared statement that's read, and then there's an open Q&A, which can cause a lot of volatility. And so on the ECB interest rate announcement, you're going to obviously expect some big moves on the euro dollar, euro pound. Not euro pound so much, but euro dollar, euro yen. And the euro pound just usually is just not as big of a mover. But you're looking at over 80% of the time moving, 70 to 80 pips on that one. So you got a pound one, and then you got a euro one right after that. So pretty intense. Back to back, like I said, that's going to be 8:30 is when the press conference comes out. The minimum bid rate's at 7.45. Usually that's not a market mover unless they surprise the market with an interest rate change, which they've done a few times in the last year. Now, we also are going to have, Thursday's a big day. We're going to have the preliminary GDP coming out at 8:30 as well. So this is further going to add to the volatility of the press conference, because it's going to, basically this rate statement's going to come out, at 7:45. Market's going to, do a little, shuffle back and forth, not a big thing. Then the statement's going to come out from the ECB press conference, going to get a big move. At the same time, the preliminary GDP is going to come out, we're going to get a big move. And then Draghi is going to get into, his last half hour, they're doing open Q&A. And then you're going to have some crazy volatility. So on the preliminary GDP, we're looking at euro dollar and pound dollar being our favorite instruments for the highest moves. Over 70% of the time, moving somewhere between 60 and 70 pips. Okay? So I would keep my focus probably just on the euro dollar itself, simply because you're having the ECB press conference there for that ought to add to that continued volatility. You did your pound trade earlier whenever they released their rate statement at 7. This one right here at 8:30, I would just keep my focus on the euro dollar just so you're not spreading yourself too thin, because this can get a little bit crazy as all this stuff is released. All right, so the preliminary GDP, also unemployment claims will come out at 8:30. So there's a lot of announcements coming out at one time. We got to get some really good euro dollar releases. And let's see here what else we got going on. And let's see other things that we can look at on the screen here. We got IVPMI on the USD CAD. On the USD CAD, not really a big mover. I wouldn't put a focus on that. That's at 10 a.m. Just be aware of it. 10 a.m. the IVPMI is going to come out on the CAD. And then over here on Friday, we're going to have, let's see, what announcements? We're going to have the Canadian employment change, okay? So with the Canadian employment change, that ought to give us some big announcements. And, of course, we're going to have the big one, which is the U.S. non-farm payrolls. Now, this is going to be, expect a massive move, okay, on Friday at 8:30, because we're going to get employment change, unemployment rate, and labor productivity coming out of Canada at 8:30. And at the exact same time, we're going to get the non-farm employment change, the NFP report here in the U.S., the unemployment rate here in the U.S., the average hourly earnings in the U.S., core PCE price index, personal spending, and personal income, which obviously being holiday time, very important, all at the same time, all happening at 8:30. I would expect a solid 1 to 2 deviation, potentially easily 2 deviation move on the dollar CAD. That actually is going to be my favorite trade. I will look at multiple ones, but we're looking at 80% of the time we're getting an 80 pip move on the dollar CAD. And with all that together, we may get even more, okay? So 80% of the time, 80% move on the dollar CAD, so some pretty exciting stuff there on Friday. If we look over for this, the NFP report itself, what we got, dollar franc is, I actually did this one, this report, I traded it last time when I was actually going to my daughter's school, and not when I was going there, but once we were there, and we were doing some little reading thing, and we actually did a trade on my phone on the euro dollar, pound dollar, and dollar franc, and I just rode the dollar franc like all the way up all day. It was awesome. And but the dollar franc and the pound dollar over 85% of the time move over 100 pips. Euro dollar 100% of the time, I'm sorry, not 100 pips, but those percentages are moved greater than 50 pips. But the average move on euro dollar, pound dollar, and dollar franc is greater than 100 pips. Okay, on the NFP report, the average high to low. And then on the euro dollar, 100% of the time it breaks 50. On the pound dollar and dollar franc, over 85% of the time it will break 50 pips. So I literally, you're looking at trading dollar CAD, euro dollar, pound dollar, dollar franc, and all four. I'm hitting every one of those heavy. That's usually how I'm trading those reports. We usually get a nice big move. And that comes out at 8:30, which is nice because, you know, you have about 30 minutes where the 8 o'clock, all the new ones show up. So you can look at the 10s, the 11s, the 3 o'clock expirations on the spreads and the binaries. And I was actually able to pick up some 3 o'clocks for like $4 more, $5 more last time versus using the 8 or 11s. And the way I was able to find them, and mind you, I wasn't, you know, at my computer doing a whole bunch of research. Okay, I just knew, hey, these are the ones that move. And so I hopped up, and I'll pull it up right here on the binary scanner, it's the spread scanner here, and I literally went in, and I put $100 max risk, I put 0.5 risk reward ratio, and I did this on my phone. Okay, the euro dollar, pound dollar, dollar franc, chose both directions. Okay, right there, and I didn't worry about proximity. Okay, so $100, 0.5, both directions, all. Euro dollar, pound dollar, dollar franc. And scroll down here, and I was able to look and see all of them that were lining up. And I was able to go, wow, the 3 o'clock ones cost just as much as the 11 a.m. ones. You know, maybe a couple dollars difference. So it was really a no-brainer to choose those because they were so similarly priced. I mean, you can even see it right now. Look at this. These two contracts, you know, 10 minutes, 70 minutes to expiration, the exact same risk, exact same reward. So make sure you're using the scanner to help you find these. Even if you're not in front of your computer, you can pull them up as long as you have any kind of, you know, decent smartphone. Then you just pull up the internet browser and log right in and get access right there at TFNN. Stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, going back here to the Diagnostic Trading Hour. So just going through, looking at them, and just making sure you know how to pull up these reports coming up for this week. All right, so that was the quick market wrap on the week. And of course, I'll get the reports updated, keep things going, but that will get you at least started. And to know, hey, we do have a lot coming up at the end of the week that you can look at to focus on. We got the Aussie, the U.S. yen is continuing to move higher on continued dollar strength compared to massive yen weakness. So our next target right there being just about 14 pips higher, going into the 1 deviation level. That would encompass 70% of the day's move expectation. We got the Aussie dollar moved on up. Look at that right there, that 1 deviation to the tick before falling on back down. So, again, meeting its expectation and turning right back around. Looking on over, we can great reversal, great trailing stop indicator. You know, I mean, you get all sorts of trades you can do with that. But let's see here. You also get access to that inside the scanner there. And then on the euro yen, move on up to a half deviation. Staying pretty quiet today, but moved on up solid to a half deviation, hanging there right now. On the pound yen, we can go on over here, and it's moved on up to 0.7. Yen has a lot of weakness. Pound has a moderate amount of strength. So, you know, all in all, you know, we might see that move. I don't know if we're going to get that 1 deviation move today on the pound yen. But let's see here. Looking at the pound dollar, we got to move. Let's see. Even with the big move, still within half a deviation. A lot of volatility built into the pound lately, so we'll see how that goes. But, I mean, we're talking like 80 pips, half deviation moves built in based on implied volatility right now. And so expect a lot of movement this week. Dollar CAD, I got a nice solid, just little trend up there to half deviation, doing a little pullback right now. Might pull back to settlement before it's all over. And dollar franc, on the dollar franc, we got to move on down to 0.5, on negative 0.5, on back up to 0.5. And a little pop right up there to 0.7, so we got a solid high to low of 1. So negative 0.5 to positive 0.5. That is a 1 deviation move, so we actually were able to break that 1 deviation right there on the dollar franc. And, of course, the dollar yen again moving on up towards that potential 1 deviation mark. Do a quick wrap on the indices for you. We got the Russell right now. It is moving on down to 0.7 deviations at the moment. If it continues to decline, 1127.3 would be the 1 deviation marker there. We can look on over at the S&P. On the S&P, just a whole lot of chop going on. And going down to the Dow. On the Dow right here, we got a pretty similar chop move, but had a nice little down move. Came back up, filled in that gap, you could say, I guess. And wasn't a real big gap. But, and then, filled in the gap, went in there, came back, just, really crisscrossing settlement like crazy. And then we'll do the one other one. Of course, I like the NASDAQ. I like the Russell. Just, usually have more volatility. NASDAQ being choppy like the others. Russell's is that continuous, nice trend. So, Russell, again, being the pick of the day. Pick of the day a lot lately. So good. We did get that choppiness, but we still got some more drops. And we'll go on. We can look at gold. And gold is, I got to update my contract there. But been moving on down. And I'll get that updated later. And let's see here. We got silver. We got silver right there down to 2 deviations. So massive, massive move on silver. And, let's go ahead and just pull up gold real quick. There we go. That should work, if I'm right. There we go. I'll do it later. To program it in. But let's see. What else do we got? We can check out our... you know what? That's it for the day. Anyways, we'll go over. We'll make sure you got those news trades down and just let us know, or let me know. Call in anytime, send me emails, whatever. Be glad to help you out. And I hope you all have a great day. I hope you all have a great Thanksgiving. And I will see you tomorrow right here on the Diagnostic Trading Hour.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.